last week, Dave dedicated 3 of the hot seat classes to me. This is one of his new models for hot seat, and I called it the 3-day deep dive. And so what I'm going to talk about tonight is how these 3 days of the deep dive really revealed a root cause, which is beliefs, something I've been wanting to surface for a really long time, something I've been wanting to talk about actually since I joined Hot Seat. Remember, Dave, I told you a year ago I wanted to do a class on psychology.
I do remember.
Finally doing it. Yeah. So tonight we're going to talk about, believe it or not, hacking your trading beliefs. And already my technology is not moving. Okay, there we go. So for some of the new people that have joined us, thank you very much for coming tonight. And you may not know that I am from Pittsburgh, and so I am a big Steelers fan. My sister was Ben's sports psychologist. If you don't know who Ben is, then you don't know anything about football. But I love this quote by Mike Tomlin: "Scared money don't make money." Boy, is that really true about trading. And it really, since I have been operating from a place of fear, I'm giving away my power. And I've known that for a while, but it's not so easy to know it and then figure out how to change it. And so the goal here really is to trade free, and therefore we can be free, right? So what I'm going to talk about tonight is a model for assessing your core beliefs and values, because they really shape your trading story. But it's very hard to identify your core beliefs. You can't just make it up. You can't just say, well, I think it's this or that, because probably it's not. And it takes a little bit more of digging deep and asking questions, and Dave asking those questions to really figure out and surface what your core beliefs are that are influencing your trading behavior. And like a lighthouse, I'm very big on lighthouses. Your beliefs and your values are especially important in uncertainty, challenges, and chaos. Does that describe the environment we live in trading, or what? So it's applicable to our marketing structure. And of course, something I'm going to talk about here, it's also important how we learn when we have positive or negative trading experiences. And unfortunately, those negative trading experiences tend to stick with us the most. Our values are very much a part of our core beliefs, and they reflect our standards, our principles, our expectations of what do we expect of ourselves? What do we expect of the market? What do we expect to get out of this? And of course, that's our goals and achievements. And for somebody like me, who is a recovering perfectionist, it's difficult when you're not achieving to figure out how do I navigate this? I've had successful careers in everything I've ever tried until I get to trading, and it's like hitting a wall. So it all kind of started back with me, the light trader, way up in all my funded accounts when the Forexing, prop firm debacle happened. And then all of a sudden I get in Darwin and I have this huge drawdown, and it made me wacko. I have no idea what happened to me. I just went wacko. And I could not figure out, why am I not executing when I should, what I should? As Dave points out, I'm an emotional trader. I don't think I've always been an emotional trader. I think I kind of grew into that because of the things that I was experiencing. But that's an important part now of what I have to master, as well as changing my beliefs about trading. And the stress boundaries. One of the things Dave surfaced last week was, I don't remember what his question was, but I said to him, if I have 3, 4, 5 positions on and they're all red, I start to panic. I don't like red. I like to stay in the green. So, that's a boundary, and that starts causing stress for me, something I didn't realize. I do know that trading your funded accounts is very much different than my demos. If you looked at my demos, If I could take them to the bank, I'd be a rich person. My demos are in great shape, but my funded accounts are not. So there's definitely this problem of this, unequilibrium thing about when you're trading funded money. So I am so done with demos. I have to conquer the mindset of trading. And when I say funded accounts, I don't necessarily mean money accounts. It's the accounts that are important, the accounts that are being measured, the accounts that have a consequence, that are going to lead us to money. But demos don't. And so I could trade demos the rest of my life and I'd probably be rich, or not rich, but I could probably pretend I am. And one of the most important things that has guided my life is focusing on opportunities. What you focus on expands. Where you focus is where you go, that sort of thing. But when you're losing, that's a very, very hard thing to just keep your attention on it. And one of the things I want to talk about tonight is figuring out where the opportunities are so that we can focus on how we take those easy profits. And that sentence that Dave introduced to me last week about where the easy profits has really worked. Because I do want to tell you, Dave, I'm almost afraid to tell you this, but ever since the second class, I have been up in every funded account 25.25 to 0.55. So I'm doing great. I even traded.
Hey, let me just congratulate you on that, because that is a major accomplishment for you to say that.
And I haven't
even
had
if
a losing day, knock on wood, but
yeah,
I've
and
been
it's
not
not
just up. I've been up a lot.
yeah, and it's not just about like tomorrow if you have a bad day or two bad days in a row. It's it's
5 days.
instilling a belief system in you that you can do it. And a
Yes.
month ago, or a while ago, I don't know however long, you were saying I can't hit a 0.25%. I can't hit a 3.30. And
A month ago, I was convinced that I was wacko and I couldn't do this anymore.
yeah, and
And I don't know
you're
why.
the reason. And I would hear that, and I'd hear you say that, and I'm like, and then you told me you were leaving on vacation, or you're gonna go, to your
Yeah.
daughter, and I'm like, well, when you get back, let's do a 3-day deep dive, and let's try to help you out, and figure this out. And I'm
Yeah.
like, hey, and then that's really the reason why I started to do these 3-day trading interventions, or whatever I call them. But
Training. It's a training intervention. It's so true.
intervention.
And it's also, this is how we're really getting to the psychology. I mean, that's not an accident. I think that has become a theme in the last couple of weeks, because we all have skills that we know how to trade. And I think that the next level of our taking it to the next level requires conquering this psychology. And that's really what I'm trying to introduce a model tonight that will help us and help people individually assess their beliefs. Because again, you can't just say, well, this is my belief. If you think it's your belief, it probably isn't, because there's something deeper that you don't realize. So this is a model I've actually used in my organization change and strategy career for many years. And I applied it to this and made some changes to apply to trading, but it really fits. So we're going to walk through this. And the key point here is our underlying trading beliefs drive everything you do trading, everything. So let's look at how that works. So you have beliefs and values, and what you believe controls you. Your beliefs are your assumptions about the truth. A lot is about the truth. It's the truth that the market's going to do this or that, or it's true that I can or can't do that, or it's true that when on an FOMC day, it's going to go whack. The stay away because it's going to the market's gonna be hard to trade. We develop these truths over time, whether they are true or false, but we believe those, they are assumptions. We believe in assumptions that are about the market, and more importantly, you develop assumptions about your trading self. And these influence your decisions, often unconsciously. If it was conscious, we probably wouldn't need to have this class. And I also want to point out that these beliefs can be either individually or collectively. And we, as a Trade the Fund community, I think we have come together and we have developed some very healthy beliefs, but we may also have some beliefs that require changing because now we're doing Darwin, or now the summer market's here, or blah, 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 blah. And we recognizing that can make us all better traders. I also want to say that this is a principle I've known about forever, but resistance means your beliefs are conflicting. If you bump up against resistance in yourself or in anybody that you are talking to, it is because they have a differing belief than what you are trying to push on them. And you have to get to understanding what that belief is so you can find that common ground. It's a very important thing for you as an individual to understand and feel, hey, why am I resisting this? Because my belief is different than what this person is who's asserting something. That is a really big opportunity for us to uncover our beliefs that can change everything. So our values influence our actions. And again, they are our assumptions. So what do I mean about assumptions? Well, we use it every day. When we say the market should do this, the market should pull back to 50%, the market should go there, that is a value. We are making an assumption about, 80% of the time the market should do this. And then what happens when it doesn't? We're shocked. We're in upside down. We're caught, we're caught. And so that assumption becomes a very critical part of our methodology and how we get out of it. But recognizing it can be important. And then finally, I want to say conflicting values cause a breakdown in your trading behavior. So if you can understand, this is a very human thing. If you can understand in yourself whether you have a conflicting beliefs or conflicting values, that can be a huge key to changing your trading behavior. But Dave can't tell you what that is. I can't tell you what that is. It takes some self-examination when you trade and understanding, how you're trading. And I think, as Josh says, it takes, butts and seat time. It does take experience trading. So beliefs and values drive the rules, norms, and boundaries. And I have never seen, David, another example better about this model than Trade the Fund. What you have put together in the 3 and 50 method, our rules are systematized, they're written, they're embedded in their guidelines. This is what we're all here for, to learn, because you've done this fantastic job of defining these rules and you've made very hidden things explicit. The inexplicit things are the norms, the unwritten rules that we follow. And norms, by the way, are learned. They are usually learned through experience or participation, but nobody really says, oh, hey, this is what we do. That is not a norm. That's a rule. So they are tactical, they're procedural, they often involve limits. And that's where boundaries become very important. And boundaries, this is something new I've thought about in the last couple weeks, because I hit a boundary last week when I refused to trade the news with David. And it wasn't that I don't trade the news. I do trade the news. I just don't trade the first candle. And it is a boundary is what is your limit for what you're going to do or not do. And I also, how many discussions have we had about our daily risk? Well, I'm going to set my daily risk at 2% or 3% or 1%. And that didn't work because I'm not making enough. So I'm going to make it 0.5, when the daily risk is a personal thing for everybody, but it's a boundary. And do you stick to it? Are you sticking to your boundaries? Because boundaries are healthy. There's a lot of people in life who work very hard to get boundaries because they didn't grow up with a structure where their parents or their authorities gave them boundaries. And so boundaries are a very important part for us in our psychology, but especially in trading. Identifying your personal boundaries are a personal preference, and they're extremely important to figure that out. And your understanding your beliefs and values will do that, because Well, before we get into let's go into some examples. So here's some examples of our rules in the 3 and 50.
Hey, Megan, really quick.
Yeah.
Are you supposed to be sharing something?
You can't see?
No, I mean, you've
Oh
been
my
doing great, so I didn't
gosh.
want to
I
break you up. I
shared
was
it.
like, I
Oh
thought you
my
were just
gosh.
talking.
Oh my
So
gosh,
I
I
was just
shared these. Thank
curious.
you. Oh my gosh, should I go back and start my slides?
No,
I
I
hit
think
the share the screen and I thought you saw
I'm
it.
like, wow, she's doing really good just off the top of her head.
Oh my gosh. I know. I'm gonna, I don't know if I can go back to the beginning.
No, you're fine. I think
Oh
I
my
think you've
gosh,
been
I
doing
shared so
great.
many great screens, so many great PowerPoint slides. So maybe I'll post this or something where people can look through it. But at any
Please,
rate,
yeah, please do. Please do. And
yeah.
if you could send it to me so I could put it into the video, that would be
Yeah,
great.
I hit the share the screen and I thought that it clicked, but apparently it didn't
No,
it
wow, you
didn't
put a
go.
lot of
But
effort
yeah,
into
can you
this, so
guys
I'm
see this
glad.
now?
Absolutely, and
I'm
it
glad we
looks
didn't get
really,
it through.
really great. It looks like you put a lot of energy and effort into it, so I'm so glad you're able to
Well,
share it
I'm
with
the
us.
IBM's PowerPoint queen, so I was. So at any rate, this is a slide you've seen before, but when I did the high probability max profit class,
Mm,
um,
mhm.
and it's the best slide for talking about what are the rules that we live by. So in the top corner, we have the process where we assess the market, we identify our action points, we select our position size, and we decide. Deciding, remember what I said? Your beliefs your decisions are driven by your beliefs. So that's a very important piece of this. So in the 3 and 50 method, we have all these threes. We have our market structure threes. Are is it a range, a trend, an outside range? Where's the KPI? Where's, blah, blah, blah. That's our setup for threes. We have the 3 types of exits. We have the 3 kinds of secures for gold. We have the three kinds of closing versus securing. All of these are examples of the explicit rules that have been cemented, I think, through David's experience with his own success, and now he's transferring it to us. If he had failed at these things, we wouldn't be doing this, right? But over time, he is really, I can see what's happening here. I can't transfer this. I can't move the slide. That's probably what happened. There we go. But all of these things are driven by underlying beliefs that are driven by market structure rules. And David, you've done a great job of helping us figure out what those market structure rules are. On the other hand, what are the rules for us to not do? We have a lot of them, and we recently changed one. We changed the early game rules from the early game was 0 to 10, and mid game was 10 to 25, and late game was 25 to 40 or 50 or 100 for some people. But with Darwin, that's not going to work. And with the running markets, that's not going to work. I think, in fact, that's probably why I got in a drawdown mess, because the running markets, right? So we've changed our early game rules from less than 10 and being conservative in our mid game, and don't go to the late game. This is a really good example of how we've adapted the rules because our beliefs changed and the market and our opportunity changed, and we adapted. One of the other rules we have is to not be more aggressive when losing while winning. And I think for some of us who learn to trade the wobble, I think we learned to go in upside down and layer in and be way up. And I think that's where we are very comfortable with losing. We're comfortable with losing, but then all of a sudden we're trying to build and we're not comfortable, but here we are winning. And I think that has surfaced in some conversations in the last week or so. And this tracks back to the rules and the underlying beliefs. Another one is how to set your secure line and how close do you select secure it. I personally think this is fear driven because Why do we set the secure line so close? Out of fear. We're afraid we're going to give back hard-earned profit. And we don't want to do that. And yet it's natural for the market to pull back a little bit. So setting your secure lines is an example of a rule that we've established that's fear-driven, and we need to work on our method for how we deal with that. Another fear-driven one is overlearning risk management. I don't think everybody has this problem, but I think Carol and I have agreed we have this problem, and there may be other people. The failure to identify maximum gains at your action points. This is the greed factor. Do we take maximum gain, or do we secure and try? And we had a conversation in class today about that, didn't we, David?
Yep.
And is it fear or is it greed? It's probably an individual thing, actually. But it's establishing a rule around that, and a rule when what you don't do is as equally as important as the rule for what you do. And finally, failure to adapt to the change in the market structure and the large vertical candles, the news, the KPIs are our number one thing, I think. How do we, we're in buys, and all of a sudden we hit the apex and you got to change the sales. That's hard. And not changing is fear driven, because we've put in an anchor and we think, oh, we've had some success and this thing is still going up, and oh, I don't, what if that's not the apex? And so switch into sales, or what's the other problem? We switch to sales, then we switch back to buys because we lose a couple sales. Then we switch back to sales because, oh, buys didn't work either. And then pretty soon we're like, we're down a lot for nothing, for absolutely no reason. And all of that is fear driven. So these kinds of things with the rules and to the things that we should not do. The way to overcome that is to focus on not to focus on what you're doing wrong, because that creates more fear, but to say, what am I doing right? Focus on the opportunity and what is right about this, because sometimes I actually literally stop myself and go, well, that was really bad, but what was right about it? What did I do well? And as an emotional trader, I probably need that more than I need the fear of, hey, you screwed up again, right? So if we put all of that together, we've got beliefs and values, and I'm sorry you missed the first chart on this, but this is what it looks like. The beliefs and values, which drive the rules and norms, which drive your behavior. Behavior is the expression of the beliefs and values that are underlining what you do. And the results are the visible, measurable outcomes. Big losses versus big wins. Your continuous profitability, our ongoing prayer and goal. Our stats, our account growth, the Darwin allocations is the new one we just added, and we've had to adapt our behavior so that we can figure out how to get that first 30K allocation. So those kinds of things and how to get those results are driven by beliefs, values, rules, and norms of the system, and out of the behavior we take on and the results we get. And then guess what? The consequence of that is the meaning that you personally apply to it. Oh, that was good or bad. That's a judgment. These are my feelings. These are my decisions. There's a reward or not, and the risk. And the problem with consequences is they're magnified, especially if things went wrong. They tend to not be magnified when you're like, yeah, I hit 10%. You feel great, but you tend to magnify them more when they're negative. And that, I think, is kind of human nature. But by failing to meet the trading goals and the results, you have to live with it. And a lot of times it causes implications in your life, on your trading expenses, on your confidence. This was me. It really affected my confidence when it went on week after week. And that affects future trades, future setups, how you see the setups. And again, the underlying beliefs that you might not realize and you might not even realize that they've changed, because you get into either, when you're winning, you're in this increasing returns of positive, but when you're losing, you're in increasing returns of negative. And it's very hard to get out of that spiral. And so I want to give you this little model, because I want people to think about this, and I encourage you to put it in the chat. I didn't open my chat, so I can't see it right now. But if people are thinking right now, what are your beliefs about the market or trading? What do you think it is that is driving your trading? And or what are the assumptions that you're making about your own trading? And if you can't come up with any, then that is your homework assignment, because this is a really important psychological dimension for you to explore. If you've never done it, it's important. I want to give you some examples, and mine is the obvious one. I'm in a drawdown, I can't get out. That was like, it wasn't a complaint, it was a plea for help. It was like, oh my gosh, what is going wrong here? Moving the break-even line. I told Eagle one day, moving the break-even line doesn't work for me, and I'm never doing it again. Well, I am. But I did. I told him that, didn't I, Eagle? And not being able to hit goal easily is a very common thing, but one that I got stuck in. I was second on the leaderboard all October, November, and then all of a sudden, couldn't go. The feeling that you're never going to get funded, and somebody recently said to me, do you really think Darwin's ever going to allocate to you? And I was like, oh, I took my breath away, like, oh, yes, I do. I do think they will allocate to me. And the only way they're not going to allocate to me is if I quit. But one way or the other, yeah, I'm going to get there. And then I used to tell David I can't trade overnight, but guess what? I'm actually pretty good at it if I do it. If I do it, I'm pretty good at it. And so those are personal. There's some collective goals, I think, beliefs that we share. And one of them, this is a really important rule and belief that drives a lot of what we do in the 3 and 50 method, which is 80% of the time, price will pull back to that 50% line. And it will either fail to pull back to the 50% or it will hit it and bounce off of it, or it'll break through it. But that 50% line has become such an important marker for us, and it's a truth now. It really is, because it's just remarkable how reliable that it is. So that is an example of a belief that drives our behavior in the 3 and 50 method. The cup and handle pattern is very reliable, and the fib works. We know the fib works. And I love what Dave said last week, where he made a comment that the 3 and 50 method is the fib redefined. And it's like, that is like, oh, yes, that's absolutely what it is. That is so true. It is the fib and how it works redefined, and we have developed a way that we behave with it, the way we interact with it. And again, it's based on our collective belief as a group. So the underlying assumptions, what's important to you? Big one. Are you comfortable when price is going against you or when it's going with you? Because some of us, ironically, are more comfortable when we're losing. It's a weird thing, but it's true. And we've had some confessions to that lately. A big one for me is I'm in too light. Other people are extremely aggressive to hit their goal, and you can't even ask them. You can't help them. You know, they have to decide for themselves that they're going to figure out how to not be as aggressive. What's driving that aggression or going too light? It's the belief system. Plan A and Plan B assumptions. I think we are all good at Plan A. I think most of us have a Plan A. But when Plan B assumptions move against us, are we good at that? Are we making valid assumptions about the market, or is that when the system breaks down for us because we don't have a grip on what our rule is or what our behavior is going to be and what the belief is that's driving it? So it is a fact that building is hard, fading is easier. That's why we like counter trend trading. And I think that that is one of the things about the beliefs and the assumptions that is like, it's like a scale. And it seems to me there's a lot of people really good at counter trend trading and a lot of people good at trend trading. I'm a trend trader. I will probably always prefer trend trading, but I'm trying to balance it. I'm trying to be able to be both good at both at the appropriate times. And then the overnight trading is a funny thing because we can't sit and watch it. And I think it tests you because you can't sit and watch it. And so you have to trust the system. You have to let it go, do what you can, let it go, protect yourself, but it's a important factor in that. So let's talk about how we change those beliefs. We've agreed that the beliefs drive everything, whether we know it or not, consciously or unconsciously. And we've talked a little bit about how to help identify some of those beliefs. It's not easy, but with experience, you can surface them. But how can you change that trading behavior and get different performance results by changing your underlying beliefs? So you do it by changing your assumptions and about how the market structure works and how you assess, execute, and how you interact with the market structure. And that third one is really important, interaction, because Dave has done a fantastic job. It's the power of the trade the fund method, but only you interact with it. Dave cannot, he can only tell you, but he can't do it. You have to decide for yourself how you personally are going to click the button or not and interact with that market structure and apply the rules and go from there. So to change your trading performance, it begins with confirming through experience transformed beliefs. So you have to figure out your beliefs and you have to be able to transform them, but it's not enough to say it. You can't just say, well, I believe this. You have to experience that your beliefs are working for you. And again, the 3 and 50 method is designed to help us do that. It's based very much on the repeatable outcomes. Hitting your goal and taking less risk and smaller losses, which I feel is something that Darwin has contributed to us. It's not necessarily what we were aiming for before, but it is requiring us to adapt. And I'm hoping it will help me come back from a drawdown. I'm on the way, but I got a long way to go. Realizing continuous profitable account growth is really our goal. And doing it with low risk factors is what Darwin emphasizes. And that is different for us because we've been willing to take bigger losses and 2, 3, 4, 5% losses in order to get small wins. That's not going to get us to our goal if we continue to trade with that behavior. So that's an example of something that we need, that we are in the process of changing. We must align. We must have alignment between our words and our actions, between our beliefs and our consequences. This is often hard to see. You don't see sometimes the incongruity between the two, but the alignment, you are not going to believe it if you don't experience it. And that is why this is in red. It's not effective enough to just say, oh, I'm a good trader, or, oh, I can trade overnight, or I'm good at this, or, oh, I lost, but you know what? I traded really good. If you say it, it's not enough to believe it. To believe it, you have to say it and experience it. And that is the proof to yourself. The proof to yourself is what helps you change your belief and change your performance and have that alignment. So I put this little model to test with David last week. I picked 3 things that I learned that we talked about in these 3 days of deep dive. And the first biggest one, the reason I wanted to do this was the drawdown. The fear, once I get in a drawdown, this is not new. This is not a Darwin thing. It comes from being in drawdown purgatory with apiary for years. I know where it came from. And I have this belief that when I get in a drawdown, I can't get out. I freeze. I don't like the red, those kinds of things. So the underlying drivers that I deal with on that are the losing streaks that I'm experiencing, feeling stuck, feeling like I can't do this anymore. Why is this happening to me? I'm not in control. The tech issues have been a big problem for me in the last year, especially when we got rid of MT5. And the speed's important. I can't always react fast enough because my hand's right by the screen, but you can hit the button. It's not instantaneous. And over trading in a demo count. It doesn't do as much good to keep trading and trading well in a demo account. So those are the things that I think were really underlying my belief that I'm stuck in this drawdown and I'm never going to get out of it. So how do I get out of it? The remedy is to gather evidence on my trading self. And I have to prove to myself, I can't say it, I have to do it. I have to do things like stick to 5 to 10 trades, which is easy for me. In fact, I have to increase to get to 5 to 10 trades because I was doing like 1 to 2. So getting better. The minimum loss percentage becomes a really important measurement for me to make sure that I don't let the losses grow so large that I start peeling them off sooner. And I don't let them get out of hand so that then it all of a sudden adds up to this huge drawdown, which got me in trouble in the first place, trying to slam in for break evens. I need to prove to myself in Darwin that I can come back from this drawdown. That is why I have not reset Darwin. I probably should have. It probably would have been a better decision for me to just reset 2 months ago and get on with it. But I said, if I do that and I have another drawdown, I'm in the same boat. So I'm going to stick it out. That's where I'm at. We'll see what I do. The better execution. This is the story of the rest of our trading life. We all know how to trade. We all have good PTP. We all understand the rules of the system, but what we're doing is continuously working on the better execution. We know how to take the action for PPT and exits, etc. We don't always do it, and that consistency is what we have to continuously strive for the rest of our trading life. It's not something that I think we're ever going to perfect. Going light, but knowing how many trades, is my goal. That was huge last week. Dave talked about a measurement of how many trades, if you put on X number of trades will get you to the goal. Well, almost every time we talked about it, it was 10, no matter where we were. Just you need to get in 10 entries and you'll be at goal. But you need to get into the 10 entries when it's going to move 7 to 10 pips, because then you're a goal. And it was easy. And I'm going to talk about that a little bit more, but that's really the key. That's what it means to accept what the market is giving you. And I think also a lot of us have fallen into the trap that we fix our drawdowns, we fix the trading mess we created, we fix whatever we got ourselves into by taking more risk. And that is not the answer. Taking less risk, taking it slower, taking more positions, looking for the opportunities instead of looking at the risk and being afraid of where it failed. That's how we're going to get out of it. Another belief, believe it or not, I didn't always hit my daily goal, but guess what? I've started to do that. But when I was in that place, it was like, what's wrong with me? I've I always do this. Like, why can't I do this anymore? It was a losing streak. Well, guess, I do know that this happens in our trading careers. We do go through losing streaks. Sean talks about a losing streak he went through for like 6 months with big money, no less. So it's not something that is uncommon, but it is a psychological thing to get out of it. And having what judging ourselves for bad stats is probably one of the worst things we can do. I remember one of my econ or stats teachers in college just saying, it's just a number. The number, it's the meaning that you assign to it that makes it good or bad, but really it's just a number. And I think maybe detaching from what the meaning of that number is would help. But what is the remedy? This really, really helped me last week with David, because he started on this thing about what's the easiest move for the market that's going to give you these 7 to 10 pips. And he gave me this challenge where I got in one position, moving in the right direction. It was green, not by a lot. And he said, okay, your challenge is to get into 2 or 3 more positions before the next action point. It was so much fun. And I've continued to do it, and it's working. It's really a great challenge. And David, you probably should give that to more people because it was fun, but it's been effective for me. And it's forced me to get more than one. I don't do it if I'm in the red, but if my first entry's in the green, then I'm not afraid to put in 2 to 3 more, and it has become like a game. And really, that's kind of the second point with plan A and plan B, because plan A again is easy, but plan B, how do we get more when it's going against us? And how do you do it with lower risk? That is the remedy for how you get out of that. And that is peeling and moving the break-even line and all these little nuances that are in the trade the fund 3 and 50 technique that we all need to master. But it's something only experience can give us. How many entries to get to a goal line? So I'm keeping a more detailed journal, and I'm trying to track 3 setups that I do. And instead of just writing down in my journal the results and a few quick notes, I'm going into very in-depth detail about what was the setup and did it work, and what was the chart pattern and did it work, and what was the time frame, and what were my uncertainties, and just more data. I'm gathering evidence on myself. And doing that, I realized that I hit my goal I succeeded my goal at 0.39%, but it took me 47 wins to get it. But I wasn't in 47 wins all at once. I was in it over that 2 or 3 hour period, a little bit at a time. And when I went back into the trade history and I added up all the entries and there were 47, I was like, wow, that's not trading light. That was trading effectively. And I didn't put them all on at once. I think that's kind of the key point there. But it was the trading journal that really helped me figure that out, and going back and looking at the trade history. And I know a lot of people like to take the screenshots, and I do that sometimes, but I have so many, it gets confusing. Finally, I want to say this again. It's more about positive reinforcement. What am I doing right? I tend to look at what did I do wrong? What did I do wrong? But that doesn't help me. The thing that's most important as a remedy for overcoming not hitting the daily goal is, well, what worked? What am I doing right? How can I do more of that so that I can hit the goal and exceed the goal? And guess what? I'm hitting goal and succeeding it in both my APR account and my Darwin account. So I'm doing it twice every day. So that represents like a really huge difference between like 2 weeks ago and now last week. And finally, this is a really good one because I'm never going to move the break even line again. I'm done with that. But what I really learned, and the reason I feel that way is because that was the cause of my big Darwin drawdown. I slammed in to move the break even down and it didn't work. It was a running market and I froze. I couldn't get out. And so that's the root cause. But what I really have come to grips with is I love that break even line on Anubis and Talon. It's what I don't like is going in too heavy. So if I can control going in too heavy, the break even line does work for me. And how I've controlled it, if you look under the remedy, is I only do 3 entries at an action point. I don't slam in. I keep that break even line moving with me every price cycle. I don't wait till it's 5 price cycles down and then I got to slam in to move it down 3 price cycles. If it goes into the second price cycle, I move it down to the second price cycle to the action point. I don't let it get out of control. And I might just take some losses before it goes to the third price cycle. That has been a huge adaptation. And it's made a difference in how I feel about the break even line. And it's definitely made a difference in my results. Let's see, what else on here is important. Moving the break even line to the right place is part of what I just talked about. It's not enough to just put it at any action point, because we all know that's where you should put it. But for me, putting it to a close action point has been a critical success factor. It has made the difference between whether I'm in trouble or I actually can get out of this ahead of the game and in green. And I also really love keeping the daily goal line in perspective. I have moved my daily goal to 0.30, but my real goal is to do it more than once. But I keep it at 3.0 because I want to see it. And if I can secure it and let it run and it hits it, then I'll go in, I will move it and I'll up it to like 0.51. And if it hits that, I'll up it again and it may or may not go any farther, but that's worked. And that is experience. It's a positive reinforcement for me instead of can't do it. It's working. Let's see if I forgot anything here. Peeling when appropriate is, I'm getting better at that. And what I mean by it is I learned to peel in the wobble method, which frankly is a lot easier when you're taking a lot of two take profits, and we're not doing that anymore. Every now and then I'll throw one of those 2 take profits on, but really the 0 take profit is the way to go. And so what I mean by peeling when it's appropriate is that on the first touch, that's when you might peel a loss, not when it's approaching the breakout. So if it hits once and twice and 3 times, and now it's going to break through on the 0, 1, 2, 3, you should have taken that out a long time ago. You should not be going into a breakout in a negative position. And that's what I mean by that. Peeling when it's appropriate. The first touch is the best appropriate thing because then you can get back in if it comes back to 2, 3, or 4, but don't hold if it's not appropriate. And I think that evaluating that is an important step in the whole process. So for us to become full-time traders for income, I think that the new critical success factor for me, now that we have this Darwin opportunity and our objectives have changed to longer term and some people are building personal accounts, it's really to just trade easy, stay in the green, trade easy and less stressful. And it's about seizing the opportunities that are easy to hit, not about the setup that may or may not go against you and run against you. And I think that that's what I used to do is like, oh, here's an action point. I'll just, I'll take an entry. But if it's not going to be an opportunity that is going to be easy, I shouldn't do it. I should just wait and then wait for that, the better action point. It's not just because it's an action point doesn't mean it's the right place. This is huge. Precision is key. Very small mistakes can lead to very significant losses very quickly. And that's what happened to me the night I got into the Darwin drawdown. I knew I should have taken it out. I never had another chance. And I spent the whole night regretting it. And you have to be quick. You have to know in advance what you're going to do. And you have to know where and when plan B is, because plan A is not always going to work. Might work 80% of the time, but it might be that 20% day. And this is a big factor, I think, is building for profit, not for protection. That was my mindset for 8 years. It's risk management. I'm just trying to keep myself from losing. I don't want to lose. I'm just gonna get in here and hopefully won't lose, but really trying to enter for profit, for opportunity, being in the right place was never, ever, ever ingrained in my brain. It was always about risk management. And it's not about plan B is for protection, but let's have a better plan A. Let's make sure our beliefs and our values and our method and our everything is consistent. There's consistency in our alignment. That's the word I want. Let's make sure we are in alignment with ourselves, because that is what is going to build for profit, and that's what is going to make this easy to seize our opportunities. And finally, I can thank Eagle for this because I think it's brilliant. And he's like, you got to forgive yourself. And it's true. You got to let it go. And
Whoa.
very hard time with this, very hard
Okay.
time. But he's right. You got to let it go when you make a mistake. And I can't let it be a cloud. I have to let it go. And I'm letting all
Just,
that drawdown
hey,
business go. What?
that is awesome. I was gonna say that is awesome that you've come to a realization. Just, the only thing I would just caution you is just don't ever say eagle and brilliant in the same sentence.
Okay.
But I
It's the
love,
concept that's brilliant.
love that you've come to that conclusion.
Right.
Yes.
Yeah. But he's the one who recognized that I was holding myself in like this place of guilt. And yeah, I mean, it's like this big cloud, so I have to let it go. Probably still working at it. But that's what I prepared for tonight. I don't know if I can go back to my early slides or not. I don't think so. But I think that the deep dive last
Well,
week was extremely effective. And how I can tell that it was effective, Dave, is because my results changed. Why did my results change? Because I experienced things, because I got to those core values and beliefs that I hadn't recognized. And it was significant. It was all around those three things: the drawdown, the break even, and the why can't I do this anymore? And by focusing on those three things and really peeling back to, well, what is it I'm believing about it? But how do and you showing me how to apply it. I really honestly don't know what it is we did in those 3 days that made me change, but it did. It did. But I don't remember one thing that was like, what am I really trading differently? Um, I don't know
well,
what in the
I
moment
knew
was, but
going
I,
into
I,
that.
go ahead.
No, I think I have a little bit of a lag. Sorry about that. I knew going into those 3 days that we weren't going to have reinvent your trading or have a different style or have a huge aha moment when it came to trading, because I've traded with you long enough to know that you're a good trader. It was really what you're talking about tonight. It was really just accepting your belief system and ingraining that a little bit further and showing that, you know what, this isn't hard. You've got this. You just need to believe in yourself and peel it back and make it easy and stop making it
Yeah,
so difficult. Says in my mind, in my opinion, you were getting in the own you were getting in your own way of success. And so we
absolutely I
needed
was.
to
Mhm.
take a step back to before we could go forward. Do you know what I
Yeah,
mean?
absolutely.
And
I was getting in my own
and so I
way, and
really
I couldn't see how, but I knew I was.
exactly exactly.
So I would
Um
encourage
I
everybody to go through the exercise of really peeling back their core beliefs to understanding what is underneath the way you trade and the way you behave, because I think there's gold there. And we're all experienced. And to move to the next level, I think it's part of the magic that has to happen.
I agree. I can't stress this enough, Megan. I love what you presented tonight. I love you you've challenged me to be a better instructor, and for that I thank you. A better teacher. And seeing this tonight is really um it's like it's an awakening for me in a way to see this to see your growth is so powerful to me, and I love it. And so I appreciate you sharing this journey with me and allowing me to be part of it. So I'm very humbled and grateful. Now this is just the beginning, of your new of Megan 2.0 or whatever we want to call it.
Yeah,
Um,
right.
and and I'm excited to see what the future holds for you. But just know that if you start to trigger, if you start to fall back into your trigger points of, self inflicting damaging, we need to work on things that you can identify that you're doing that next, so that you can curb that and nip it as soon as it starts to happen, right? Because there's no
Yeah,
secret sauce to having perfect trading days every day. It's not going to happen. You're going to go through slumps, but you can't add to those slumps by having negative reaction and negative recourses and slipping back into old negative thought habits, right? And that's the most important thing, is that now that you've come above it, I believe in the old adage that once a brain has been stretched, it'll never go back to its original form. Well,
right.
Megan, your
Yeah.
brain has been stretched, and your trading brain has been growing this whole time, and you finally have allowed it to grow instead of stipening that growth. And so again, thank you for allowing me to be a part of that journey. I appreciate it. So
And thank you
anybody
for
else have any questions for her?
Yeah,
Oh, go ahead.
you mentioned that you don't like to see the red each time. So I was thinking if you should change the color of your down candles from red.
make them blue or something. Yeah.
Yeah,
I like it.
Yeah, that's a good one. Well, I'm talking about
it could be, it
in
could
the
work.
profit and loss on the thing, but I don't know if we can change that, but it's good. I wonder if I can make those green. It's good, Cliff. It's all psychological, right?
Yeah, that's what it is.
Yeah. And I think, the other thing I want to say is I've been trading 8 years. This has happened before in a different way. It's probably going to happen again. So you're right, David. The key is to not let it go so long and catch it so you can adapt sooner. But sometimes we just don't know how to get out of that. And this is the value of this trading
Mhm.
community, because we can see in each other's things that are different that you don't see yourself.
This is quite detailed. I wish I could, it's going to be posted to go back through it.
Yeah, let me see if I can end the slideshow. And what I would really like to do, if you guys are willing to let me, I'm gonna um stop the share, and now I'm gonna share it again. I'm gonna go back to the beginning. I'm just gonna show you. I'm gonna leaf through because can you see that? No, I'm sharing the wrong screen again.
Well,
There
Megan,
it is. Okay, there it is. The problem is I have a lot of stuff open, and so it doesn't always do that. Okay. So, this was the Mike Tomlin thing, but what I want to show you, let me go to the slideshow from the beginning, is, I will post this. I'll make it a PDF and I will post it. But what I want to show you is, you know, the key point here was it's hard to identify your core beliefs, but and these are the beliefs that were really holding me back, the stress, the accounts, where it is, this model right here of the beliefs and the values, which drive the rules and norms and boundaries, which drive your behavior, results, and consequences. What I want to say about this model is you can reverse engineer it. You can start with mapping out your consequences and your results and saying, why did I get that result? What was that behavior? What was the rule what was I thinking? What was important behind that? What was the value? What did I believe? Why did I do that? And that becomes a really helpful way of, when you get to those core beliefs, you can go, why am I believing that? That's stupid. You know, like that's like not true. But yeah, we fall into those kinds of things. And again, on this slide, it's unconscious. Most of the time, our beliefs are unconscious.
Can you go back? You go back to the previous slide.
I didn't hear you. You want to go back?
In the previous one. Thank you.
I've used this model in many different ways for 30, 40 years. And no matter what I apply it to, what system I apply it to, it works. And when I applied it to trading, it was like, oh, this is it. This is what is happening. And this is why I'm not getting the result that I want. And I have to tweak my beliefs and, you know, the input, right? Can I move on, Cliff? Are you good?
Yes, thanks.
And so I just wanted to leaf through here because this is the part that I wasn't showing you when I broke it down into the beliefs and values and the rules and norms. The rules, the norms, and the boundaries are extremely important. And the rules of the 3 and 50 method, we talk about them every day. Doesn't always mean that we do them. And when we aren't doing them and we're not executing, why? Because our belief in ourself, or our belief in the system, or there's some belief that is getting in our way. And sometimes it's the unwritten norms, because this is the way we always do things. That's what a norm is. This is how we work. This is the way we always do it. And I think that Darwin is really pushing back on some of our norms that for the last year we've been pursuing. And now we're all like, okay, how do we do this without all that risk? And how do we, you know, how do we get their score, which is a result, a consequence, is to get their 75, and using their risk factor. What is it we have to manipulate in this little alignment model in order to start getting our score up to 75? And when I do that, I'll let you know how it works. And then this is the slide we caught up on. But this is the slide I had presented in the high probability setups, and it's still true. And rules of not to do. There we go.
Megan, I think you stumbled onto the whole process for Darwin. And I mean, how many times have you heard Dave say, I'm going to get the goal in 4 iterations?
Yeah.
Well, if you use your 10 trades, 4 iterations, that's 40. You had 47 trades and you were at your goal.
And that's what I've been trying to do when I enter once. And if it's going against me, I don't keep entering. I either exit or I let it ride for a little bit, but I don't keep entering like I used to. And I also am not afraid to not ever enter. So yeah, I try to go to that. To get to goal, I need X number of entries.
Thank you, Megan.
right behind that big church,
Welcome.
which is called the St. Louis Cathedral.
Thank you, Megan. Excellent job.
30 blocks.
You're welcome. Thanks for coming,
Yeah,
everybody.
this is a really great job.
Thank you, Dave.
I appreciate it. Yeah.
I learned something
If
last
there's
week.
nothing else, well, good. I'm finally, right? Finally. I'm just kidding. That's awesome.
So, all right.
Thank you guys. And I think just to let you guys know, I'm looking for some overnight stuff in the cell direction. I've kind of been in that. I think it's gonna pop down. So if anybody's doing that, so get into some overnights before you go to bed.
You're gonna go south,
and
did you
so
say?
yeah, just playing some breakouts, seeing if we get them or not. So setting Anubis up for some breakouts. So, but again, thank you, Megan. Great job, guys. I am exhausted. Didn't get much sleep last night, so I'm gonna go to sleep. So, thank you
Yep,
guys, and
me
we will
too.
see you in the AM.
Bye-bye.
Thanks. Bye.